Welcome to Trading Lounge and the US indices, and starting with the NASDAQ today. And today I want to present a different scenario, and because with a lot of the Asian markets we already have 5 waves down for wave 4 is being completed, and we've been tracking the NASDAQ here, which would be the top 100 or 107 or whatever it is, but when we look at the two NASDAQs, if I can go to the physical market here, this one here is the NASDAQ that we track the top 100 stocks here, and we can see here that this is a daily chart, of course, so this high here is higher than this one here. But it's still possible to get 5 waves down here in terms of 1 and 2 here and 3 here and 4 here and 5 here. There is an overlapping here, and it would probably count better as an A wave, a B wave and a C wave here for the triangle pattern that's possible to be playing out. But you know, I'm thinking that when we look at the NASDAQ Comp, which covers a lot more stocks than the top 100 and is just much better to track, is we can see here that this is not the high here and this is the high here. So really we could look at this as 1 and 2 here and 3 here and 4 here and 5 here, and that would make much more sense, wouldn't it? So it's possible that you know, if we look at the comp, which holds a much larger variety of, you know, tech stocks than the 100, that we already have 5 waves down here for this, so we could have a low in place here for this market. So that's what this is what I wanted to talk about today, is that we could possibly already have 5 waves down for this. Now, you know, we can look at this in terms of well, from the top here to the bottom here, this is the 61.8, 50, 60% retracement level, and that's sort of where we're heading. And the thing is that what we need to work out with this move up through here, in a nutshell, we don't need that, sorry about that. So what we need to work out here realistically to the 61.8% mark, do we get 3 waves here, or do we get an impulse wave coming into this space here? Because whichever one we get, we know that into this box here to the 61.8% is, you know, how it's going to play out from there. So if we get 5 waves up here, of course we're going to get a 3-wave counter trend, and then we'll be pushing up here again. So it's really all eyes on this one, on this particular move here. So just looking into the 4-hour chart here, this counts quite nicely down as 1 and 2 and 3 and 4 and 5 here. It's kind of got the right look and feel about it, hasn't it, you know? And our target to the upside would be this here. Of course we're going to have problems at the 7,000 for this market, because, you know, it's tied into the previous support and it's the closest largest number and so on. Have I updated the hourly chart for this? Yes, I have. So we talked here last time about we'd counted 5 waves down here. That was the main point, you know, and we looked after our short trades, which is fine. And we wanted to go long where we'd been short. We're on a stop here, so that's the case. So I suppose we could count this up here as an A and a B and a C wave here. If I can just find one over here, but we'll borrow this one. So it's possible to have, you know, a corrective rally into this space here for this market as such here, and we could move down from that point there. But we can also, you know, I know that if this market is going to move to the upside, we always look to a very limited amount of patterns, and really the classic trading levels pattern, we have the arrival, the reaction in 3 waves, and then we have the first high above the level, which will be 5 waves, and then we have an A and a B and a C wave here, and then, you know, if the market's going to push up. So what we do in these cases here is you normally trade to the 7,000, you get out, and you just wait for all this stuff to go on here, this particular pattern. And of course you can count this in Elliott terms as well, but it's just, even if you don't understand Elliott, it's just nice to know the arrival, the reaction, the first high above the level, so you don't go chasing that one, and you just wait for it to fall out of that point, and then we can use Then we can use that high here to go long for from there. Then we can also bring it down to this one here, and of course you can bring it down to a little one just on this one here. As this starts to move up and find support there, you can go that way, or you can just draw a line through there. There's many roads to Rome, so to speak. But the important thing is that you're getting your timing right, so being on the right side at the right time. And also, you know, this particular thing here is really simple to understand, and it's always got a very high probability of success as well. So if you have trouble with Elliott, it's good to know the three patterns that can occur at a level there. The other pattern here, which is the variation of this, is the arrival, the reaction in 3 here, the first high above the level, and sometimes if it goes too high, then the ABC will just actually sit on this level here and then move up from there. But it never bothers us because we've always got the top high, or this one here, this one, or this one to go long on here as well, you know. So this is a variation on this one here. Of course, the other pattern here while we're here is the overshoot pattern, where it doesn't stop at the level here. But what we find, because it's a strong number, it just goes straight through, but it runs out of steam, and then it'll, you know, it gets oversold, and then in some way it finds its way across here like this, and then moves up here, and it finds the closest largest number here as the balance point here. So really it's either 1, 2, or 3 here in that particular order as well. This is the most common here. Let's have a look at the S&P 500. So with the S&P, we could look at it like this. There's a couple of ways we could look at it. We could look at it with this high here, and as 1 here and 2 here, and then the third wave down here, and the fourth wave and the fifth wave here, and we've got this in play here, and we're moving up through here. There is another variation on this which we've got on our website, where this is wave 4 here, and we're still looking for wave 5 to go down, but it has to fail from this particular point here and move down from here. So if you see total failure there, then you know what that is at that particular point. Okay, so the other point here is, so that's on our website, that counts. I don't need to go into that a great deal. The other point here is that, same with the NASDAQ, is that from the top here to the low here, the 2800 here, it is the sort of balance line for the 50 and the 61.8% retracement level. So if we do see it move higher from here, and when I say higher from here, if you're getting support on we'll go in and have a look at all of this in a moment, but you know, there's that triangle pattern too that's possible for all this. I don't think it's the case, but and it doesn't really matter, because even if it is, we'll still get the same. We'll get the same sort of pattern to this particular point here. So let's just go in and look at this here. That 4 hours not going to be very helpful to us. Might just have to go to the tick chart. So in this case, we could count this up here at first glance with a wave to here, a B wave to here, and then have this as 1 in here, 2 in here, and then all of this 3, 4, and 5 here. So if this is going to be corrective as that blue wave 4 I mentioned, then we're going to have to see the market come down from that particular point. Okay, and that's kind of fine too if that's going to be the case. But let's just go into the tick chart. I think I've updated this. Let's have a look. Right, yeah, so I've got a bit of a different count here. Let's just get this into play here. So I think this is the better count here for this. In this count here, I can count 5 waves up to this point here as wave 1, and 2 in here, and 3 in here, and 4 here, and 5 here. I know that it overlaps a little bit here, but if you're looking at this on the cash market, so on the cash cash market, as you can see here, this is a 5-minute chart here. This move up through here is what it is, and then we've got this ABC pattern here. So really, whichever way you look at this, all of this here would be 1 and 2 here, and then we've got a nice strong third wave up here, haven't we? And then the fourth wave here. So this will be the fifth wave moving up through here. So it is looking like we've got 5 waves to the upside here. I need to get some more information on another session here from the physical market, the cash market. So just looking, just bringing your mind back here a little bit. Oops, a daisy. So all of this here, this is why I've got this as 1 here and 2 here. I mean, the first instance that you'd look at this here would be to get this here and put wave 1 here and wave 2 here, and then have wave 1 here and wave 2 here. That would also be a nice fit there. But the problem with that is that it just doesn't line up with the cash market here on this low here. So it's always nice to have those two sort of working together, at least kind of. You've got 2 different counts there, haven't we? So which one would be more important? So I prefer to go to the physical market for that, because there's no leverage in that, and it won't get skewed as much. So yeah, so it's possible that we can have a top in here as well, and if that's the case here, then we'll see if that's the market top here, for instance, then we'll see the market pull back into this space here as a 50-60% retracement level. But as I mentioned as well, let's just have a closer look at this little stuff in here. I'm thinking this is like the A wave here, the B wave in 3 here, and I know it looks a little bit odd, but 1 and 2 and 3 and 4 and 5 here to finish this wave 4 here. So I'm kind of happy with this being wave 4 here at this stage, but I could certainly be wrong with that. But yeah, we'll just have to see how that pans out. This move up here, as up into wave 5, could also be finished as well, because we could have, let me just get my bearings on this. No, it doesn't look finished. It would be finished if it moved. I can't draw on this side here. I can say to you that because of the trading levels, if this number here becomes the retested resistance, the 2720 becomes the resistance here, then the market's going to be pulled down to the closest largest number. Okay, it's okay. I can draw on this side of the price over here. It's okay for this market to come down to 1.5 here, 2715 here, and then move back up there, and then continue to go up. And I mean over here with this, but if this becomes if the market moves through and then finds it as resistance and then comes down into this space here, then it's likely to continue to move down at that point. So a lot of the times I see it spike down just below that, but not find that number there as resistance. I know that's sort of subtle, but if that's the case, then if that becomes resistance, then you know that you'll be coming down further. You'll be pulled down to this number, and if you're being pulled down to this number, then we have to look at the bigger picture here and consider it coming down below the 27 here as well. So yeah, so really, as I mentioned last time we spoke, what we're trying to do now is we're trying to figure out, do we have 5 waves up here, or do we have a corrective wave moving up here? At this stage here, it certainly looks like it's got the weight of being an impulse wave to the upside, but we need to confirm that on the physical market. Alrighty, thanks for tuning in. Cheers.